to me a little bit about what are some successes that we've had and what are some challenges that we had, so I can kind of customize this lesson and walk through with each person. So I'm just going to pick names to start with. Aaron, start with you. So what are some successes you've had with, and if anybody's not going after financial advisors, or you want to switch gears to, well, I prefer to stick with financial advisors if we can. But Aaron, what success failures?
Yep. So I've had meetings with 4 different financial advisors. Successes is they're all eager and willing to participate in the mortgage deficiency checkup referral piece of the business. However, most of the financial advisors that I've talked to want a net worth of $1 million before they're interested in talking to somebody. So some of the challenge that I've had is finding the right young financial advisor to plug in, so that not all clients that I refer over are going to be $1 million net worth clients. And so trying to dial that in or find the right financial advisor is one of the hard things that I've done.
So really easy solution. There's 3 types of financial advisors. Okay. First one is what you're referring to, and they're actually considered asset managers. So it's somebody that manages $100 million in assets, but they only have 80 clients. That is 1,000% who you don't want. They'll refer you a client buying $1 million house, and the tax returns will be 32 pages, and they got 64 S corps, and it's just like a freaking nightmare. Like, how the hell do I even calculate this guy income, right? And he's not going to take a bank statement. It's only a loan. Imagine getting those bank statements. So I learned to shy away from those types of financial advisors. The type of financial advisor number 2 is your life insurance salespeople that are disguised as life insurance as financial advisors. That's your New York Life people. That's your Northwestern Mutual. That's your Pacific Central. So MetLife is another one. So that's life insurance salespeople that are disguised as financial advisors. And then number 3 is a combination of both. So I run like the Dickens away from the asset managers, because my average loan amount is $415,000. My net worth of most of my clients is probably like $100,000, not $1 million. But and then also, if they refer me a client that has got a multiple $1 million net worth, they're really difficult to work with. So I focus majority of my financial advisors, all 76 that refer as business. I focus on life insurance salespeople that have 80% of their income is life insurance, cash value life insurance, and 20% of their income is asset management. So they understand assets, so I can refer them $100,000 for a 401k rollover, and they're tickled pink that they got a $100,000 401k rollover, because they're really happy about that. But then also I can refer them John Smith that makes $80,000 a year, that has like $20,000 to the bank, and they'll do life insurance with them, they'll do budget planning with them, and they'll start doing a $300 a month annuity with them. I want access to their database. Another benefit of focusing on life insurance type of financial advisors is they've got a huge database of past clients. So Northwestern Mutual, I've learned to focus on the top 20%. And the top 20% is they all have had 4 years worth of experience or more. And with 4 years of experience or more, and if they're in that top 20%, on average, they've got about 900 clients in their database. So how big of a pool is that of clients for them to go after? And you get that database into like a homebody, or you get that database into like a monitor base, triggers pop up right and left. Versus if you're going after an asset manager that has $100 million in assets and has 80 clients, you might get a trigger once a quarter. I explain that well?
Yep. And now I know how to shift my attention, because I've been focused on asset manager, which has just been like banging my head against the wall. So helpful.
Loans are super difficult to do, and then more importantly, it's just a different type of person that I don't. And more power to them. I mean, good for them that they have $100 million in management and they only have to deal with 80 clients. It's just not my type of clientele.
Makes sense. Thank you.
Cool. All right. Brock's sitting next to me. He's checking his email right now.
Skip here real quick. I'm
Skip. All right, he's found something on Facebook. He's interested. Tony, let's jump to you. So talk to me about your experience with financial advisors. What is something you feel you've done really well with, and where are you struggling that I can kind of specifically help with?
Well, since our call, I've got several meetings set with newer financial planners and not asset managers. But here's a interesting struggle, kind of embarrassing struggle. I'm talking to an asset manager, or not an asset, a financial planner. She's a real financial planner. I've done their last 2 loans, and she will not. She's just too busy to meet, which means I know that I'm not doing something right because I'm not offering any value if she's too busy to meet. But her first name is Mary. I said, Mary, I just want to make sure, did I do a good job for you? Were you happy? Do you like? And she said, you're marvelous. Anytime we buy a house, we're going to come to you. And I haven't just said, well, then why in the world don't you think you can share this with your clients? Maybe I should be that a lot, but it is amazing. And this has been going on for 6 months, this dance. So how would you suggest I move forward?
Okay. So you close a loan for her. I guess tell me a little bit about what type of services she provide. Do you think she's more life insurance, more asset management, death benefit? Like what is she kind of more?
She's more life insurance.
Yeah. Awesome.
Okay.
So you're trying to win her over with your charm. I would then come back and try to be like, I call it the puppy dog approach. I would say, hey, Mary, I feel I can refer you a lot more clients because I'm putting them in $500,000 worth of mortgage debt, but they have no life insurance. What would you suggest that I share with my clients when I'm doing a loan application with them, that I'm putting them $500,000 in debt for their family, but they don't have life insurance? How should I pitch that to them where I can get them to want to have a conversation with you? She tells you A, B, C, D, this is how you do it. This is what I want you to say. This is this, and this. Okay, absolutely awesome. Thank you so much. So when I do this, how do you want me to refer to you? Well, what do you mean, Wally? Well, is it okay if I put you and them on a joint email, a warm introduction, and then from there, share both your phone numbers? Yeah, Wally, that's absolutely perfect. Okay, awesome. Thank you, Mary. Now, once I do this, I'm not going to ask for it right now, Mary, but once I do this, and I refer you 1 client, 2 clients, 3 clients, 5 clients, so on and so on, and you make an income off those clients, do you feel I have then earned an opportunity to receive referrals back from you where I can earn an income off your referrals? Do you see the framing and how the
Yeah. It's straight to the point, but it's a soft straight to the point.
Yeah, it's definitely a soft straight to the point, but I'm structured where there's like mutual accountability.
Yeah, I like that.
You can structure it to where it's mutual accountability. You do the same thing with your realtors, your CPAs, your financial advisors, family will attorneys, so on and so on across the board. And it's a great way to be able to add value to them, but make sure that when you're feeding them, they're focused on feeding you also.
Okay, thank you.
You bet. Mark?
I was actually taking some good notes. I have 2 identified financial advisors that I talked to. One that was a realtor before she became an FA, and now she does send me like some of her clients, but I haven't gained her trust to get her database. I think it's just what you just touched on right now, just asking straight to the point, to get that capture of the database. If I'm sending her, I mean, over the last 6 to 8 months, I've probably sent her like 2 leads, The other guy, his brother is a loan officer. he's kind of gave me commitments like, hey, if you're in the Dallas area and my clients are in the Dallas area, like I'd like to connect them locally to somebody, so you could be my referral. But if he's like in San Antonio area, I'll send them to the other person, to my brother, So he has me on his radar, but there hasn't been any reciprocity between the two of us. So still trying to gain their database. So I'm still in the infancy stage, basically, with both, to
Yeah,
try to gain more of their trust.
before we try to run a 4-minute mile, how about we try to like one walk around the lap, right? And what I mean by that is, how can you refer them a client and they refer a client back to you, not their database? So let that develop.
Yep.
So I'd structure it as the next client that you get, I want you to do two things different. When you refer the financial advisor, do is a warm email introduction, introducing both of them via email. And from that warm email introduction, then you want to make sure that you share both their phone numbers. Wait 48 hours, pick up the phone and call the financial advisor. Let's just say you referred him Tuesday. Pick up the phone on Thursday and call the financial advisor and say, hey, Mr. or Mrs. Financial Advisor, I referred you to John Smith on Tuesday. Were you able to get a hold of John Smith? They're either going to tell you yes, or they're going to tell you no. If they tell you yes, they've scheduled John Smith and they're going to do a consultation with John Smith. Absolutely awesome. I love that. I'm really glad that you're able to make an income off the referral I sent you. Who did you meet with this week that you can refer to me so I can earn an income also, just like you earned an income? If they turn around and say, no, I've not heard from John Smith, the client, I'm like, okay, time out. I'm going to hop off the phone with you. I'm going to call the client, John Smith, and I'm going to make sure he calls you ASAP. Because if I sent him a referral and it didn't land, I don't have the right to ask for a referral back.
Right.
If you send him a referral and the referral lands, then you've got the right, if you choose to be brave enough, you've got the right to be able to ask for a referral back.
Makes sense. Good.
Good.
Yeah.
Being a smart aleck, it does not make sense. It makes dollars, but we'll let that one go.
True.
All right, Matthew. Y'all can't see Matthew, but he's to my left. What is one thing that, or you can't? Hi, Matthew. There he is. How are things kind of going with the financial advisors? Give me one good success story and give me one good failure that I can help.
Yeah, I'd say this year is a lot better than last year. And I think the main reason is because of keeping track of the referrals that I'm sending out. So I could much more easily refer back to those clients and do what you said, which is I called them once a month and I said, hey, I sent you these 3 clients this month. Which ones did you speak to? Which ones did you not speak to?
Everybody hear Matt?
Yeah. And which ones are moving forward?
Okay.
And once they told me, hey, yeah, great, these 2 guys out of the 3 are moving forward. Hey, that's awesome. It's a 66% conversion rate. Are these the kind of clients you want me to be sending to you? Yes, awesome, great. And then that's when I ask the question, who have you spoken with recently? And if they say no, I ask them, what kind of questions are you asking? Mortgage related questions are you asking in your consultations? And normally they say none. And then I'll coach them on what questions they could ask. And so one good success story from a new financial advisor.
Oh, let's go back. Hold that thought. Don't forget it. Every salesperson over exaggerates their numbers. Would we all agree?
Yeah.
Okay. Every salesperson, including myself, over exaggerates their numbers. But you can checkmate them with their numbers. So on the first qualifying meeting with a financial advisor, I ask them this. I say, hey, I've read a lot of great books about being a great financial advisor. One of them is, I'll pick one of the 14 over there. And I say, I've learned the number of appointments with new clients that you meet with per week is a really big deciding factor if you're going to reach your goals or not. So how many clients you usually meet with per week? Just like the first lunch or first coffee. And I try to have 2 appointments a day, 5 appointments a day, whatever the number is. So it's 10 appointments a week or 20 appointments a week or whatever the number is. And now I know in my mind, I store that in the old Rolodex that, hey, they have 10 appointments a week that they do. So on my Friday calls with a financial advisor, I'm like, hey, were you able to hit your 10 appointments this week? No, I only hit 9. Okay, great. Did the client that referred you on Tuesday land? Yes, it landed. Okay, awesome. I know, and you're not gonna lie to me, you just told me that you had 9 appointments. I don't know if you have 4 or 5, who cares? You just told me 9. You had 9 appointments, so you had 9 opportunities to find clients who refer me. And now you've confirmed that my referral to you landed and you're making an income off that. If you frame it that way, and Mark, remember we talked about learning framing. If you frame it that way, they're checkmated before they've opened their mouth.
Yeah.
That makes sense?
Yep.
Okay. All right. What were you trying to say?
That's a good question that I like that about how many appointments do you need to hit or have per week to hit your goals that way, and then ask them how many they're actually doing.
Correct.
To qualify them. But yeah, so by being more direct, I think with in my accountability with them, it's really helped. And so
you guys hear that? What he said is really, really powerful. Being more direct in my accountability with them has produced a lot more business. It's so crazy. Loan officers across the board, now they'll only speak about loan officers, how they're so afraid to keep referral partners accountable. You're not getting the business anyway. They're referring to somebody else anyway. What do you have to lose? Right?
Yeah. And so, yeah, just like 2 weeks ago, you referred to me a $1.1 million refinance. And, you know, it's in the works. He's a little slow to respond, but he's saving over $2,000. So he sees the benefit.
Have you told that success story to the financial advisor? Back?
Yeah. No, I've spoken with him about it. Yeah.
Yeah, I'd structure that conversation to make sure everybody does this also. Hey, thanks so much for referring me to ABC client. Absolutely went great. I put together this presentation. He was beyond excited because I'm saving him $2,000 a month. What do you want me to tell the client so he turns around and increases the investment commitment to you as the financial advisor by $2,000 more a month? Tell him this, and this. Okay, awesome. I'll do that. I got great notes here. With that being said, I'm having trouble getting a hold of him. I've called back. He's really slow to respond. Do you mind if you go put a bug in his ear to make sure to reach back at him so I can make sure I can get you that extra $2,000 of cash flow back in your investments? Get them to be invested in your success, and they'll help you close that $1 million refi.
Yeah. Which we're doing to have that conversation with him. So he's already reached out. But he's slow to respond to this financial advisor too.
Yeah.
So anyway, I know that will be a deal. It's just one I got to pursue a little bit more. But still, all I had to do was refer him a couple of people that I already closed anyway, and was having a conversation with people that, $1.1 million refi.
All right. Anything you're struggling with, like help with? This time you were just bragging and flexing at everyone.
No, I think just continue to accountability, because I'll run into maybe dry patches.
Yeah.
Or then they're not willing to, maybe not willing, but I don't trust that they're asking the questions that they say that they're asking, when I know I'm asking the questions that are in our script, because obviously it's producing referrals. So there's proof in the pudding, whereas, hey, it's been a dry spell. If you're asking those questions statistically, you should be sending me at least one person a month.
No, more than that.
But I mean, all I'd say is like, hey, if you're speaking to X amount of people, I mean, I'm shocked that it's been one in the last 30 days. You're talking to 10, 20 people a week.
Yeah. It was getting John Q, which is like the regional manager for Northwestern Mutual in Texas, and he helped me a ton with one simple thing. I was having the same struggle that Matt was having back in like 2020 with financial advisors. I would get these like occasional refinances. It felt very accidental success. And he said it's because you're not getting them to install you within their process. You're not getting them, if they've got a 9-step process with a client, you've got to make sure between step 6 and step 7, they input you and they know to pitch you between step 6 and step 7 and build it that way. If you leave it up to them, some clients might be rushed, some clients might be this, some clients might be that, and then you're not able, it's not consistent referrals. So if they've got a 9-step process of their model that they follow, find out. What I've learned is find out from them I just ask them, where in the journey of the client experience do you feel it's the best time to refer me to make sure the mortgage runs as efficiently as possible? It's probably between this, and that. Okay, awesome. So if it's between this and that, is that part of your process? Is that part of your team flow? Who on your team is responsible for that step in the process? Oh, my assistant, Sally. Okay. So with your permission, I'll reach out to Sally, explain to Sally what we're doing, then confirm with Sally that she knows between step 6 and step 7, she does A, B, and C to be able to refer me John Smith that does X, Y, and Z. You want to get infused into their model, and that's where you get consistent numbers instead of just inconsistent occasional success.
And I think that'd be the next, because I am doing the accountability call, so I think that'd be the next question in the accountability call, is letting them know, hey, when I sent this person over, I sent them over on my 7-day post-closing call, right? What part of your, like you said, what part of your process do you think you have the highest likelihood of a referral to ask such and such questions or ask for referral?
100%. Got it. Neil, what's been going well with you with financial advisors? What's been going poorly?
And we had this conversation earlier this morning, but I think it's asking for me getting introduced to one of my clients' financial advisors if they give it a 8 or higher on the rating scale, and then just making sure that there's follow-up to that, because you just can't expect a client to say that they're going to do something and maybe there's a 50-50 shot that it does. So like what we talked about this morning, that's getting me closer to having more conversations with the financial advisors. Those that I do, I've focused on Western Mutual just because of this conversation, and getting more referrals, asking one of them in particular, where would I fit in your process, saying that we conduct mortgage efficiency checkups, and for her to acknowledge that that's not something that she does currently in her process, and thought that it would be a good idea. So allowing her to figure out when and where that that conversation should be had in their conversation. So we're in the process when they're interviewing somebody. So I don't know if there's a success or failure, but it's just a matter of staying focused and doing what I'm doing.
I'm gonna look something up while we are meeting here. So I'm gonna say, go to my friend Google, and I'm gonna ask my friend, what is the percentage of home owners with an escrow shortage? Anybody have a guess?
50-50. 45%.
25.
56% of homeowners have an escrow shortage within the last 12 months. Google that one and have a conversation with your financial advisor and say, hey, I don't know if you've seen the last Google stat or whatever it is on there. 1 out of 2 Americans out there have an escrow shortage. That means that their monthly payment's gone up $100, $200, $400, $500 extra a month. That's going to give them less money to invest with you. Plus, also, it's going to put a strain on their family's cash flow. Would you know any of your clients that have an escrow shortage that I can reach out and coach around through my process mortgage efficiency checkup call and be able to add value to them with that? You realize that they've got a 7% rate, or you realize they've got $60,000 of credit card debt, or you realize they got a first and a second lien, the second lien's at 9%. You realize that they got monthly mortgage insurance. You're going to find other problems with their mortgage that you can turn around and add value to them other than just simply fixing their escrow account. Did I explain that well, Neil?
Yep, sure did.
Yeah, good. All right. I know we had the coaching earlier on where you're struggling, and I think it's, what I gave a tip for Neil this morning was around the accountability of how to keep other people accountable. When he talked to 2 clients that said that their financial advisor is like a 10 out of 10. He got excited about it, which he should get excited about it. And they said, yeah, sure, I'll refer you my financial advisor, but those referrals haven't come in. So what I told him this morning is when you do that and you say yes, I want to refer you my financial advisor, Wally. Okay, great. So let's just say it's Tuesday. So I'm meeting with a client on Friday that I want to refer that financial advisor to. Do you think you can refer me to that financial advisor by Thursday? Then you follow up via email to them to be able to stay in relationship with them. But when you're asking for these referrals, make sure that you give them accountability around it, and you'll see that you'll get a lot more referrals more consistently. Funky Town.
Yeah, I did not really know what issues I was having until you explained the difference between the asset manager, life insurance sales, and a combo. I was going after asset managers unknowingly, because when people said, "Oh yeah, like I would check about doing an insurance policy," something I kind of like scrapped that and was trying to find somebody else who I thought was a better fit. So that's going to be awesome. I think to kind of reframe that. Another struggle I guess I had is, a few of the people that I've had the calls with that I could refer over, um, are younger, like you said, don't really have a lot of cash, things like that. And so now reframing this to where it's not a true asset manager, understanding how I can deliver that client to the financial planner with the thoughts of insurance policies for the mortgage with their kids, like some of these ideas, and just kind of say that they have a lot of options we might not think of. So I'd highly encourage you to have a conversation with them, just really push that over. Because the one guy that I've partnered with who said we can reciprocate, I've referred a couple people, but it was the pushback on that saying, I don't have the money, I'm not ready. So I didn't really have an overcome, for that piece, but I think now I do. So
So you refer to a client, and your client said, "Hey, I want to invest, but I don't have the money to invest."
yeah, like one of them, she's my cousin. And so I know that, she's on a limited income with her kid. She's got 20 grand in the bank or so. Her payment just went up $100 from taxes and all that. So she's scared to death to not have that money in her savings account. And so like she like won't agree to the call because I was framing it as, oh yeah, he can take your assets and like make them make money for you. Whereas she's like, no, I need my assets with me.
Yeah.
So,
Does she have cash flow on a monthly basis that she can invest 500 or $1,000 on the investment?
Yep. Mhm.
Yeah. So I mean, I'd structure the conversation that way, where the financial advisor knows going in, and any Northwestern Mutual financial advisor, they set up on their investment strategy, and they invest 500, 1,000, $1,500 a month, and then they grow a portfolio for them.
But in the wins, I've got one that's agreed, and I've got calls with 3 more warm introductions. So that's great. And then I will say my one win. I haven't really been going after financial advisors fully. I spent a couple weeks trying to go after the Air Force Base and figuring out a way to kind of get into them and talk real life stuff. And so I've made a connection with one of the captains, and he told me today that he'll introduce me to the head of that division, who does all the stuff for financial planning, for mortgages, first time buyers, like whatever, to introduce me there so I can try to get into the Air Force Base. So that's a little bit of a win.
Well, we've got amazing VA pricing, so make sure you check out Freedom, and I think you'll like it a ton.
For sure.
All right. So that kind of concludes the lesson that I want to kind of go through today and figure out where everybody's gaps are for financial advisors. But do we want to switch gears on another wealth advisor, or who wants to kind of share any struggles they're having with realtors that I can help with? Everybody loves realtors, and they love you, and everybody's doing great with realtors.
Hey, I have a question, Wally. From our conversations last week with the team reaching out to the realtors database or Do you guys have scripts for that yet? Any updates? Did
Yeah.
you already?
Caleb emailed that to you last
That's
week.
what Caleb emailed. Okay, got it.
Yeah, so the subject line, the attachment said home health checkups. I call them annual real estate reviews. He calls them home health checkups. Neil already have a realtor that is doing it. I sent Neil an email yesterday from, I think it was Thomas. He scheduled 3 appointments on the realtor's calendar just the one day, which was super cool.
What's the process? Just sign up for it and then connect him with the realtor, Caleb with
Yeah.
the realtor.
Connect Caleb with a realtor, and you've got the pricing structure already, so you know what that's going to cost. Just do a warm introduction with a realtor and Caleb, and I would structure it as Caleb meet John Smith, John Smith meet Caleb. He's a realtor, and he wants to start doing home health checkup calls. Caleb will do an onboarding call with you and the realtor. Go through the database, go through any kind of scrubbing or any kind of improvement from there. They'll download the database. They'll confirm all the numbers are accurate, the email addresses are accurate, scrub it, and then from there they'll start calling. Caleb has already prepared that script that's been emailed to you, and we'll review on his onboarding call. He'll review that with the realtor, make sure they're completely comfortable with everything that we're saying to schedule appointments on their calendar, and then he'll give us some tips on what to say on those appointment calls. And then his team will start dialing and then scheduling appointments on the realtor's calendar.
Question:
Beautiful.
Will the realtor have access to a Django CRM, like, or not in any form or fashion? Like, will
No,
they have access to a CRM? Okay.
yeah, it would cost them way too much money because they'd have to have a seat in there. And I mean, then they're paying $295 a month to have a seat and doing it. But no, it's dialed out of dial source in Django, but it's through our CRM instead of them having their own seat.
Gotcha. Okay.
But there's reporting that they'll get on a weekly basis of what and another thing they can do is a Google Drive between both to see who they're calling, who they spoke to, who they left voicemails with.
Okay. Yeah, I had an agent that was open to the idea, but when I spoke to her over the weekend, she didn't like the idea that people were calling on her behalf. Since it's her database, so I get issues, be protective of it. I just told her, I was like, hey, if you're receptive to the idea, let me get us in front of a call, me, you, and Caleb, as far as the agent, and kind of go from there. You make the decision, no pressure. So I'm still trying to get that commitment, at least to have that combo. So yeah, I'll just
Talk to me about what's the hesitation of calling on their behalf. I mean, when they'd rather us call on their behalf or call the first call and say, hey, we're with Aspire.
I didn't know what to exactly say in rebuttal. So what I did was, I get it. Let me get some more information. I'll get back with you. No pressure.
Let's just say the realtor's name is Sally Johnson, and it's called the Johnston Team with Keller Williams. The dialer will call and say, hey, this is John. I'm with the Johnston Team at Keller Williams. Sally Johnson is your real estate professional. Sally wanted me to reach out to you, schedule a time with your calendar to do your home health checkup. Here's what to expect from the call. Boom, 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 boom. And then from there, then they schedule a call with Sally, and it goes on their calendar. So
Gotcha.
I'll connect with Caleb and get that script out to everyone, or I'll tell him after this call. And it's already in your inbox, Aaron. If you want it again, just if you can't find it, he sent it last
I've got
week.
it. Found it.
Okay, cool. And then you'll bless you, Mark. Aaron, if you don't mind, can you just forward that out for me? Save me a step to all at Aspire or whatever. And then Mark, you'll see it at your fingertips, and then you know exactly what they say.
Sure. Yeah, I'll give her a shout back.
Cool. Who else wants to know more about home health checkup calls or what the concierge team does for realtors? You know who I'm really confused about? Nathan, why are you not doing home health checkup calls as a freaking realtor yourself?
Well, I'm working on that with Robert a little bit to get this going. I've only had, I guess, 15 clients, and it started just last year, so I'm not even a year in. So I'm working on it.
All right, you got some grace. I'm like, dude's a realtor. Why is he not doing it?
Oh yeah, no, I'm going to. I think it's awesome.
Okay. All right. Good. What else can I do to help? So I don't feel like I'm wasting my time. Do you mind if everybody tells me what's the one thing their biggest takeaway from today is? Sorry, you, Brock, since you playing on Facebook all day.
My biggest takeaway is just the difference between each advisor. And the way that I've thought about it is, I think it was you that was talking, Aaron. It seems attractive to go after the guys that are managing 80 clients that everybody has a net worth of 10, $20 million. It seems like an awesome loan size to be able to take on. But the reason for doing this is to grow volume and continue that business back and forth. And those just like my best friend's a financial advisor, but he's only got 40 clients. Those 40 clients are going to be moving and refinancing all the time. So it's going to be a lot less opportunity compared to the insurance type of financial advisor. So that's my biggest takeaway for how I approach the bigger ones look all shiny, but this may not be as much business.
Okay. I love it.
Mine too. I agree. That's my biggest takeaway as well.
You stole mine, Aaron.
Yeah. Hey, that's what it was. Sounds like that was a big takeaway for a lot of us.
Yeah. Mine was just, trying to get the next deal from the actual financial advisor instead of their database. Just showing that value by just like, hey, I guess instead of focusing on like the bigger picture, right, that'll come down the road, but it's just, showing value, with the next referral and holding them accountable and being direct and whatnot, as far as with conversation with them, as far as them being a referral partner and a quality one that, you see that it could sustain that relationship down the road,
I appreciate that. Last thing I want to do is I don't want to waste anybody's time. So thank you for sharing, Neil. Anything that I helped you with today, or waste your time?
I think it's just the accountability. We as advisors, we have the opportunity to refer out a fair amount of folks. And I think when we refer out, we feel good and we forget about following up. And that's the piece where you can either be a good loan officer or a really good loan officer if you're following up with those partners, holding them accountable and asking for the business. And I think that's the key is to be more direct with the ask. Because if you're giving, I think they are much more willing to give back.
Yeah.
Because as an LO, a lot of LOs never really give. We're always just waiting for a referral. So I think that's maybe their mindset when they hear that you're a loan officer, but all of a sudden you start referring them all this business and then holding them accountable. I think that's when things change. It sounds like it did for Matt. So if I have to wait 12 months, then I guess I have to wait 12 months.
All right, y'all heard it here. Neil's gonna be patient, and he's gonna wait 12 months. All right, Neil. Thank you. Nathan.
Yeah, I mean, the biggest takeaway is the distinction between asset manager and life insurance sales, that piece. And then, I mean, I know that everybody's got goals, and so yeah, you got to track it down like we do our daily calls. So just like connecting that piece with, hey, financial advisor, how many calls do you take a week or a day? I mean, starting with that, I think is going to be a huge help to kind of understand their business flow and what they look at as successful.
Yeah, exactly. Okay, good. Tony.
So 3, 1, so basically frame the conversation much more professional way you showed me, then not being afraid to hold them accountable. And then that not being afraid to hold them accountable goes down to the base of quit being such a wuss and how you're communicating with people.
Love it. Love it. If you can execute those 3 things well, you'll be unstoppable. Matthew?
I'd say mine is asking the financial advisor when is the best time to insert me into the process. So which part of the step or which step of the process.
Yeah, I like framing it as where do you feel in your process I can add the most value? what stage in the process do you feel like can add the most value? So whatever they say, okay, so what value would you want me to add at this stage? And it's really easy to know how to succeed from there. But then more importantly, there's accountability around what specifically spot in the stage. So there is no, oh yeah, I'll get around to it, Matt. Like, dude, you just told me the most impactful area I'm going to be is X, and you want me to add this much value when I do Y. There is no procrastination. Everybody get that? Cool. All right. On to the book club. Everybody read The Power of Who? Everybody's mics must be turned off. All right. We'll see you at the next mastermind. Appreciate you.